Welcome back. Well, it has been a busy week of first quarter earnings. Uber reporting revenue of $10 billion. That was better than expected, but the company lost money, reporting a loss of 32 cents a share. It also forecast lower second quarter gross bookings. The ride-hailing app reporting trips grew 21% year over year. Earlier this morning, Anheuser-Busch reported a double beat with profits rising 2.6%, but the sales to retailers were down better than 13% due to volume declines of Bud Light from customer boycotts. Later, we'll hear from Airbnb, Arm, and AMC Entertainment, all coming out after the bell. Take a look at those stocks. Uber is down 7.5% right now on that loss. Joining me now is Market Rebellion co-founder Pete Najarian. Pete, great to see you. What's your reaction to the earnings so far that we're getting?
Yeah, it's really interesting, and you point out Uber. I think that was one that a lot of people were looking at. They saw the earnings coming from Lyft. Lyft's earnings actually looked pretty solid. Unfortunately for Uber, they didn't look quite as good. I think it's something that the expansion that they're doing globally is going to take some time. The profitability has always been difficult for both of these two ride-sharing type companies. But you've got a lot of things to like about Uber, I think, going forward, and they are actually producing in a lot of different ways. So because of that, I think this is an opportunity on this push down in the stock today. I think when I look forward, there are some very positive things that you can look at for Uber that you can point your finger to say, you know what? The expansion of what they're doing and all the different areas in which they continue to be in with the food delivery and so forth, I think they're actually sitting in a good spot. And I think this is something that gives us an opportunity today.
Well, it's interesting to see the difference in terms of the quarterly numbers. Uber losing money, Lyft, and look at the stocks. Uber down almost 8%. Lyft is up this morning. And then there's Reddit. That stock is up 11% this morning. Take a look. This despite the company reporting a $575 million quarterly loss following its March IPO. The company did report an increase in revenue. It was up 48% from last year, also reporting a jump in users and ad revenue. That stock is up 11% right now. Renaissance Capital reporting that 49 IPOs so far this year with proceeds of over nearly $13 billion, Pete. Look, we're finally seeing some action in the IPO market. But what did you make of the Reddit quarter?
Yeah, the Reddit quarter I thought was pretty incredible, actually. When you look at what they've done globally, the massive user base that they've got, and the fact that they want to now expand language-wise, they want to expand this even more. You brought up some of the numbers, the revenue up 48%. I mean, that's a massive number. The problem that they still have, though, is profitability. I like this company. We all probably use it to some degree. We all know about the ad side of this. But I think that the reality is right now that once you go public, you got to start at some point in time. You've got to show everybody that you've got some profitability potential in front of you. I think that they do, but it's just not here yet. It's a little bit early. We'll see over the next 6 months, 9 months. But I'd like to see this company show us that they've got profitability within them.
Well, higher interest rates are not going to be good for some of these mid-cap and smaller companies, right? Look at the 10-year this morning and the conversation underway. The 10-year is now at 4.48%, down from the highs of the year, but up 2.5 basis points today. Minneapolis Federal Reserve President Neil Kashkari said that it's, quote, likely that the central bank will keep interest rates where they are for an extended period of time until officials are certain that inflation is on track to the 2% target. Now, right now, the futures market is pricing in a 64% chance that the Fed will cut rates for the first time in September. Pete, what are your thoughts? What are your expectations on rate cuts?
I think that as we get a little bit closer, we'll probably see those numbers start to shift around a little bit, Maria. But I think that the reality is I think we probably, if the data supports it, we probably will see a cut this year. The raise, I don't really think so. As a matter of fact, I don't think Neil Kashkari really thinks that's a possibility. I think he's just saying that if there is anything that really moves the needle in that direction, if inflation becomes not only sticky, but starts to actually lift to the upside, then maybe. And I think that's more of what he was trying to say. I think that's the very difficult thing about the Fed. You've got to listen to a lot of how they actually phrase it and what they're saying. And I think in this particular case, he was just making a case for the idea that there could be a hike. I'm not saying that he thinks that there is a hike in front of him. As a matter of fact, I think that would be extraordinary to see that actually occur. So I don't see that, but I think he at least wanted to float out that it's not an impossibility that it actually could exist.
Yeah, and he's not alone. Jim Grant said the same thing on this program back in March, because, look, we're looking at a situation where we don't even know if the economy has seen the full impact of the 11 rate hikes so far. There's that as well.
Right.
Pete, it's always great to talk with you. Thanks so much.